Good evening, everyone, and welcome to Admiral Market Session Recap, 2nd of November 2015. My name is Nenad, and today we will see different setups: Euro dollar, Pound dollar, Australian dollar, Euro GBP, dollar yen. I had also some requests for Swiss yen and for dollar CAD. I will share the views later, but I don't think it's much interesting to trade dollar CAD now and Swiss yen, but Euro GBP is definitely good. So first, before I begin, as always, our standard risk disclaimer explaining that all online education materials are developed by Admiral Markets in Estonia. They are meant for global audience. You should take into consideration that information in this session may not be suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit Admiral Markets Global, select your country of residence, and to contact an appropriate entity. Also, read disclosure statement stating all possible risks associated with Forex market. If you want to proceed further with me, you're also accepting this full risk disclaimer. Admiral Markets UK takes no responsibility for information accuracy. The analysis represents the personal opinion of the author, it's me, and it's not AM UK's opinion. Forex is risky business, and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. Nat is saying, hi Nat, saw you with Dale Pinkert in webinar today. You look smashing. Interview was fantastic. Thank you. Well, it was a good interview indeed with Mr. Dale Pinkert. Always interesting to talk to him. So we made me and Chris made some presence there and explained our views. Of course, guys, needless to say, download Admiral Markets Supreme Edition. One of the biggest reasons Admiral Markets has won Best MT4 UK award is because it's a really great tool set. Admiral Markets Supreme Edition, exclusively with Admiral Markets. Log into a trader's room, download it. Excellent, excellent, excellent. And definitely, needless to say that very, very good, excellent spreads on ECN account. Now, risk disclaimer is stating that also you need to give price a breathing room. So first, for all of you who are first here with me, let me remind you of some rules for these trades and these setups. You always need to give price a breathing room. Usually we enter within 5 to 15 pips of the predicted level if it's in agreement with your system, and use scaling in option. Now let's say, what is scaling in for all of you who don't know? Let's say that this is our buffer zone. Let's say that this is 15 pip buffer zone. So if the price is very close to our buffer zone, you can, for example, if you trade with 0.3 lots, you can open 0.10 lots here, 0.10 lots here, and 0.10 lots here if it retraces back. Do not miss good setups because they are 1 or 2 pip away from the buffer zone. Because very often it will happen that the price really bounces off indeed from this POC. Sometimes it will just happen that the price will come 1-2 pips shy from the POC and it will reject. So if you see that, lower your risk. Okay, your stop loss is always fixed, but then you can divide your trades. That is why I advise to use scaling in. If you are not able to use scaling in because you are trading with micro lots, then wait for the price to hit buffer zone. Respect your stop loss, add the spread to your stop loss always. Needless to say, on ECN account, spreads are really tight. So my advice for all of you who trade with ECN, add at least 2 or 3 pips to your stop loss. It won't hurt. First touches of the zones or levels are most profitable ones. So that is why we trade first touches of the zone, first bounces of the zone. Position trades are called trend trades. Alternative trades are called counter trend trades. Okay. Breakout trades and scalp trade levels are done independently. If I post it on our PPT, then those can be used as a second entry. So sometimes if you see this scalp or breakout, that means that you can trade the pair with 2 or 3 different setups. Depending on time and volatility, usage of trailing stop is highly recommended. I never ever recommend less than 20 pips of a profit. So we call it a profit stop, okay? For example, if you see that the price is moving in your direction, you can, after some 60 pips, let's say, you can put your stop loss to 50, plus 50. It's called profit stop, and that means that you're securing 50 pips. Now, the thing is that I don't recommend doing it if you haven't made at least 20 pips of a profit. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. Those levels are calculated by historical levels and can be really joined. They work in synergy. You can add these levels to your system and definitely pay attention to my Twitter updates because they are very important for you. Sometimes I may give an advice, sometimes I can revise a trade. It rarely happens, but sometimes. Past week results, session recap, 26th of October. Euro dollar didn't qualify, but the price went down. We will see that. Pound dollar didn't qualify because it qualified during FOMC meeting, and after FOMC it went 100 pips in profit, but according to rules it didn't qualify. Australian dollar 25 pips, Euro yen didn't qualify, dollar yen 90 pips. Total pips pool was 115. Trade of the week, of course, dollar yen. Our plan was to sell around 1.1130. What happened basically is we didn't have any setup before FOMC, and of course during FOMC we don't trade, okay? That is why I cannot say that we had any setup, because none of this has happened before FOMC. Pound dollar, same thing. Well, sometimes market may be a bit rangy when it comes to waiting for the big news to kick in. For example, Australian dollar is in a range now because later during the night, during the Tokyo session, uh, just before Tokyo session, I think it will start, or there will be some news. It will be important news for Australia. It's a cash rate decision. So we will see there will be a big volatility in Australian dollar pair. So pay attention to it. Pound dollar last week, as you can see from this chart, unfortunately, it didn't hit our POC for entry. It did hit our entry on pound dollar. It was buy position around 52, but the problem is it went up. It went huge to the upside. I was aiming here to take a short, but we didn't have any short, unfortunately. Well, it happens. Australian dollar gave us 25 pips, and this was good trade. Why? Because look at this. We had really a good touch of the zone, 71, 60 to 80, and basically it was, I can say, the last possible long trade before FOMC. Because at this time, you see, there wasn't any bounces prior to FOMC, and it happened before FOMC, and judging from the chart, you can see that this was the last possible good long trade. Because if you try to long during FOMC, here you would have been really, really hit heavily. Euro yen, unfortunately, same thing. It didn't make a pullback. This was the chance to go for a pullback towards 134.60, but unfortunately it stalled at 133.90 and it rejected from this level to the downside. So all these trend patterns were predicted to 100%, but we had two trades which qualified for entries: Australian dollar and dollar yen. And look at dollar yen, trade of the week. We had a buy position at 120.30. The price rejected perfectly from 120.30 here, and it shooted heavily to the upside. You made at least 20 points in this, because this was the trade of the week. Now, sometimes it might happen that you wait for the setups, but it's okay, because you should wait. You don't want to be impatient, because the impatience will put your account in a trouble. Always compare trading to, let's say, to a tiger. Before it runs after the prey, tiger patiently waits. When he spots a prey, he will run and chase it, but almost 100%, if the prey is not faster than a tiger, the tiger should win. That is the same with the market, guys. Because if you chase the market, believe me, you're not a tiger. You cannot chase the market, because the market will always be faster than you. Always. What you need to do is to wait patiently for the setup to appear, then run, and then open a trade. This is one of the examples how we patiently wait for the trade. This is our entry. Basically, this was the time of the webinar, and this was our entry. So we waited patiently for this. Okay. Ilya is saying hello. Hello, Ilya. I'm good, thank you. A little bit sore, but it's okay. My throat is sore. So let's see market plan for next 2 or 3 days. Euro dollar is in ranging trend, but more inclined to a downtrend. As you can see, I have done my homework, as I say, on Friday. And if you remember I will show you my analysis, which I posted with Admiral Markets and Forex Street. You could easily see that it was a bit, I can say, it was an excellent setup, I need to say, because a lot of people thought that the euro dollar will really go straight after this trend line and it will jump up and kill all those short trades. What we got basically is that perfect POC rejection. I said that POC comes at that in 10, 25 to 50 zone, and if the zone rejects, the price should proceed towards 0900. What happened? Price heavily tried to go up, and yes, it went to 1.70, and then it dropped. And what happened is basically we had a 50-60 pip on Friday just by looking at POC rejection. Now you will probably ask me what I think of a next euro dollar move? Well, I will definitely tell you what I think, because I don't change my opinion every so often. Okay, guys? And my opinion is that euro dollar is still short into rallies. I will share the screen now. I still think that euro dollar is short in rallies. The same thing, you can either try to short from this region, or you can wait for a bigger pullback to sell around 1140 with stop loss of 1200. These are two POCs. And I'm really, because on Friday you could see a big rally and then a drop, a good drop. That's why I always believe in my guns. I always trust my guns. Sometimes we can be wrong, sometimes we can be right. But the thing is, we should trust our knowledge and our charts. I always try to read what charts are saying, because charts and price action is what ultimately is showing you the possible future movement. Past and present will give you the future. 1 plus 2 equals 3, right? 2 plus 3 equals 5. It's a Fibonacci sequence, right? And you can see it here. Why did I pick, let's say, this zone here, 50 to 60? You look at this. This is inverted head and shoulders shaping up. It hasn't been formed yet, but here you can see left shoulder. Here you can see head, and here you can see right shoulder. This looks bullish, right? But the thing is, it's not bullish until it confirms a bullish movement. On Friday, this was our entry. And look, the price dropped 60 pips. Now we had another retest, and you see it's still being rejected. We have a lot of confluence here, indeed. We have H3 confluence. We have a neckline, possible neckline confluence. But we also see previous sellers a little bit more to the upside here. But you see, buyers, sellers, retest, sellers again. Now, what I would wait for, of course, if the price breaks through this resistance, this will be possible new level to sell from. Of course, guys, needless to say, if you watch my price action trading school, and I strongly encourage you to visit my price action trading school, there is a unique pattern which I call T89. Yes, I kept my promise, and I do the analysis with 89 EMA, and I will usually, when you see my analysis from now on, it will have EMA 89, because we want to see a confluence, additional confluence of 89. Especially, guys, it's important for you to see rejections of T89 pattern. T89 stands for Tarantula 89. I'm kidding, it's for tail 89. You can see here, it's a pin bar rejection from 89 EMA. 89 is a cosmic number. It's a strong number in Fibonacci ratio. It's actually 88.6, but I rounded up to 89. It's strong. And you will see when there is a pin bar rejection of like this. Look at this pin bar. Look what happened. Usually the price will follow. This also could be a pin bar, but the bigger the pin is, the better it is. So if we also get a pin bar rejection, it's a naked, I can say it's a no-brainer trade. Pin bar rejection from this region would signify a possible strong strong downside. But because we are trading the price, okay, we sometimes, not sometimes, but these session recaps are teaching you also to trade the price during a living candle, because you don't wait for the close of the candle, you just need to wait for the touch of the zone, POC. In order to trade the zone, price needs to get in a buffer zone and then bang, like a slingshot. It starts to retrace. Even New Zealand dollar, where I said, okay, look for 67.40. You see, it's still rejecting from 67.40. This signifies strength of POCs. If you haven't read my analysis on New Zealand dollar, read it. Couple of days ago, I did an analysis saying that it should reject from 67.40. And indeed it rejects. But even though it doesn't have a big rejection, you can see the power of POCs because the price didn't manage for 2 days to go above my POC. It went like 30 pip, but 30 pip on 4-hour chart is not much. It's still trying to reject from the zone. Sorry, such as is the power of POC. And look at this now. Look at this euro dollar. It's rejecting. So the same rules apply. Either it will reject from this zone or from this zone, in my opinion. Now, additional confluence is indeed T89. But because you're trading POC, you don't need to wait for a pin bar rejection. It's just for your reference. It's additional confluence. And you see, the 89 EMA is exactly at POC. Exactly at POC. Let me see if we have additional confluence here, which we have. It's 50 retracement. So you see, T89 is crossing 50 retracement at historical near-term sellers. These are sellers. If you want to trade price as professionals do, you should always look to the left, because to your left you will see historical buyers and historical sellers. This is EMA, exponential moving average. Okay? Always look for historical buyers and sellers. So that is what I think of euro dollar. Of course, well, not a lot far to the left. You can just zoom out and like this. It's enough, really. We don't have specific time frame, but let's see, this is enough for me to see that this zone was historical buying here. I have Adrian, if you haven't watched my price action training school yet, I encourage you to visit price action training school lesson 1, because every lesson so far has been recorded, and you can see how I gauge historical versus now moment buyers and sellers. Okay, and this also here. Look, these are historical sellers, near-term historical sellers. You always want to see historical price. Pound dollar, as I said a week or 2 weeks ago, I really think that pound dollar is more inclined to go up than down. And at present time, we have possible two-way trading. We can buy around 53.50 with stop loss of 53 and try to sell around 55.20 with stop loss of 55.80 and target of 53.50. Another quick analysis. This is not the full analysis, of course, because we don't have a time for such deep analysis. But just by looking at the price, Look at this. This is very important when you see this. It doesn't need to be perfect now, but you will get a point what I'm trying to imply. This is very important. Look at this and this. Up, down. So this trend line is, look, it's touching point 1, it's touching point 2. But then there is a counteraction. It looks like a spiral, like this. This is a spiral here. I call this a trend line spiral. It will be introduced in advanced part of price action trading school during this year, but just for your reference, this is the trend line spiral. You know that when DNA spiral looks like this. This is trend line spiral. Because in order to have a trend line spiral, you need to have at least 2 touches with a trend and 1 touch counter the trend. So this is ascending trend line, 1 touches, 2 touches, okay, it has 3 touches. It's strong one, right? And then look at this. It breaks down and it touches it, but from the opposite side. It's called trend line spiral, like this. See? Spiral here. It adds to the confluence. So this will be the zone of confluence here. A lot of confluence here. 89, this is 89 EMA, no 200, 89. L3, weekly pivot point, and inner trend line. Okay? So my plan is to buy here, sell there. And now we are talking about Australian dollar. Of course, guys, tonight we will have cash rate decision. I don't think that RBA will cut the rate simply because they can still tank the price by dovish statements. So I think that the price could go down. Judging from latest fundamental movings and technical analysis, and also needless to say that it's up to you whether you will trade it or not. I don't think I will, but just for your reference, if you want to trade it, this could be a possible sell spot. Okay, this is a possible sell if the price really gets it, and it is still here. But guys, it's cash rate decision, so trade at your own risk. The price is exactly at our entry, but I don't want to trade it because sometimes even during strong news my analysis is very, very valid, but this time I really don't know because there is a lot of volatility following Australian dollar during cash rate decision. So I really don't want to trade it. This is just a suggestion for you who still want to take a trade. But my recommendation is do not trade it. Still, this could happen. This could happen. Possible inverted head and shoulders, and it's still, the price has still not broken basically through this trend line. And look at this, it can even go like this. This is definitely a strong resistance here. But look, we have also 89 EMA. Everything is set up for a possible two-way trading. So it can either spike up, validating this inverted head and shoulders. I think it can go down and go up. But still, it can strongly reject from this region. So I really don't know what will be what the statement, RBA statement will be. It will totally follow a spike bias. So if statement is dovish, it will go down. The price will tank. If the statement is hawkish, guys, then I think it has possibility to go to 72.50. So up to you. Really, it's more like a gamble than a good trade. Euro GBP is in downtrend. I'm looking to sell at 72.40, 72.70 stop loss, 71 first, 70.50 second target. Euro GBP definitely strong resistance confluence with 89 EMA. Look at this. In the history, this is important level. This is right up, down. So it's like a spiral, you see. It looks like a trend line spiral. Look here. Because you have a rejection, then a retest. Usually during my analysis, I refer to this as breakout retest, because this was breakout point and this was a true retest, because exactly from a breakout point the price made a continuation here, breaking this retest part. So 2 pips below this candle there was a continuation signal. So this was a scholastic example of a breakout, pull back, and 2 pips below this setup candle continuation trade. So H5 resistance 72.50, it could spike up, and if it does, I will sell it. A lot of confluence. It would be really shame not to trade this if it happens. During, of course, next 2 or 3 days, we will see. Dollar yen is ranging, but two-way trading possible. 121.60 is sell. Stop loss is 122.10. Target price is 120.50. Then we have position buy at 119.60. 119.30 is stop loss. Target is 120.50. Dollar yen is, you can see it's ranging here. It's made some sort of a bullish V-shaped reversal. But you see, it's a big range. Up, down, up, down, up, down. So the first thing is, if we want to go with a trend, we should buy. So buy comes at 119.60, probable buy. Look at this. Look at these rejections from 119.60 region. Look. Retest to the downside, upside. So if this comes to this region, if the price really comes to this region, I think it would be a good trade. Like this. It might, you see, it's still a buffer zone, because 119.60 to 70, it's this is the buffer zone, this quadrant, this rectangle here. This is the buffer zone. And you see the price is rejecting of 89 EMA. But if we get a pullback deep enough to hit our POC, this could be a buy trade. Okay, but you see the first POC zone is rejecting it now. It's rejecting it now. So I want to see a deeper pullback towards this POC zone for a buy. For a sell trade, 121.60, because in the past we had a lot of rejections here. To the upside, then sellers retest to the downside. This was the last two of recent retests. So I think it could go short from this region. Dogan is saying, can you explain the buffer zone? Simply put, the buffer zone is POC. If you've been following my analysis on POC, you would see that it's a part of my Cabrera MACD, and it's always about finding confluence point of different technical tools. The buffer zone or POC is the zone where you want to trade the price. Okay, it's the zone for your entry, whether long or short. Now, guys, these are the setups. I will go through these slides again. You can ask me questions. I had a question from Derek. He was asking for Swiss yen and dollar CAD. I will show that. New Zealand dollar, sure. Prakash is saying, suppose if I miss the webinar, where can I see recorded videos? I will show you. Recorded videos are, you can, let me just give you the link. Okay, I will find it just a moment. Admiral Markets YouTube channel, of course. There you will see my session recap videos. This is Admiral Markets YouTube channel, and there you can find all session recap videos. And on Price Action Trading School, it has its own channel. You can see Price Action Trading School webinars also. You're welcome, Prakash. So this is euro dollar, this is pound dollar, this is Australian dollar, this is euro GBP, and this is dollar yen. Now, what you want to do is you want to see dollar CAD. I'm not a fan of dollar CAD at this point because the price is trying to go down, but this looks like it might go up. So we don't have any particular reason to trade this now. It's going down, then it's going up, then it's still going down, so it's a bit messy. Indeed, it looks like a possible uptrend. And you see, I don't like this price action here, especially this candle here. All sellers from this part here were stopped out. It looks longish to me, especially because we have triple pin bar succession. 1, 2, 3. First rejection, bang. Second rejection, bang. Third rejection, it could shoot up. So I could say this looks like a long setup, but in order to be qualified, it would need to come at least to these levels here. So just try to watch. If you see a pin bar rejection of 89 EMA, go to 1 hour chart. Look if there is some rejection to the upside or downside, then it could be at least a swing scalp. Yes, Derek, we are below 89, but look at this candle. If this candle closes above 89, it will still face resistance here. But if it closes above the weekly pivot point 31.33, I guess it will go up. So yes, it looks, that is why you asked me for dollar CAD. That is why I didn't prepare any setup for dollar CAD. I wouldn't trade this now. Really, I wouldn't trade this because it looks bullish, but the price is still bearish in overall picture. Look at this. This is high, this is low, this is lower high, and this could be another lower low, right? And yes, this is big momentum, but Caroline, this momentum also happened, right? It happened during London Open. So you see, it's not that. I don't particularly think this is a good setup from this. We can see a spike down and we can also see a spike up. So needless to say, I'm not a big fan of this. And I will do now Swiss yen, but let me show you first Euro yen today. This is that tool, correlation matrix. And I told you that if the price gets to 130 to 20, which it did, it could reject. Now we are seeing rejections of Euro yen of these zones here, 133.20. See, the price is rejecting. You see, it was a slow day, but sometimes even during slow days, the price will listen to the analysis. At the time while I was making the analysis, the price was at 132.86 and it came to 133.20 and it rejected. But now it's end of day trade, so we need patience. Okay, and now Swiss yen. I particularly don't look that pair every so often, but judging from this looks bullish indeed. But same thing, look, this is your POC zone. And you see what is happening basically. The price cannot break to the upside, the price cannot break to the downside. So if you want to trade this, I would say wait to see whether the price will indeed be rejected from this region or it will close above H3. If it closes above H3, it could go long. This looks like inverted head and shoulders, but you see the price is being rejected at the top of the right shoulder. Basically, not at the bottom, at the top, which should break to the upside, but it can't break. It was 3-4 times try to break the price to the upside, but it was futile. So Swiss yen is meant to go up, but it stops short, so not a good setup. Rand is asking for a roll-on of slides before the end, of course. Carolyn, yes, I looked at your analysis, but I forgot it, to be honest. I need to take a look again. I knew I was taking a look, and I think it was good one, but pardon me, I really forgot to comment on it. So I will take a look, a deeper look. You will have, just relax, guys. During price action training school, after we finish with the school, and it will last, as I say, for a full year, it will have a lot of classes. Then you will get your homeworks, and we will have special webinars after that where I will review your homeworks. So we are a real school, okay? These are not just simple webinars. We are a real school here. And okay, so New Zealand dollar. My outlook is still the same. I'm still looking short from this. I'm really, because overall it looks like it's resisting this region here. And even we have a trend line even here. Now, yes, we see a slight bullish outlook here, which could be a leaned head and shoulders, inverted head and shoulders, because there is a left head right. But look, this is high, this is low, this is lower high, this is lower low. Now this is lower high. You see, it went too much to the upside. Look, just place a Fibonacci. So guys, it's only 38.2 from 700 pips. So in order for me to go long, I would really want to see a bigger retracement. But here, the only thing from risk to reward perspective, I can see shorts. Now, of course, guys, New Zealand dollar will probably move. Let me see the correlation matrix with Australian dollar. Okay. Correlation matrix is saying that Australian dollar, okay, I didn't get it here, add, save. So Australian dollar is having 75 correlation on 4-hour 200 bars. Guys, it's very big correlation. Very, very big correlation indeed. Let me see 1-hour chart, 200 bars. Still strong correlation. So it's very strong correlation. So probably if Australian dollar goes down, it will bring New Zealand dollar along, because Australian dollar and New Zealand dollar are commodity currencies. New Zealand dollar is soft commodity currency. Australian dollar is hard commodity currency. So probably, and you see the correlation. So if Australian dollar tanks after RBA announcement, it will pull New Zealand dollar with it, or vice versa. If New Zealand goes up, Australian dollar will go up, or Australian dollar go up, New Zealand up too. Okay. So that is New Zealand. The Karen is saying when I posted the analysis, it went up for almost 30 pips. But I ended up with break even because I could not monitor the trade. I was sleeping. I know. The problem when you sleep is you need to have your computer on and you need to use a trailing stop expert advisor. And if you have it, try to set it up that it automatically puts your stop to 20 pips. I don't know. Yes, it happened a lot of times to me also. For example, during the night, I'm 40 pip in profit, and when I woke up, it's stop loss. Well, and now set and forget. For me, Caroline, no set and forget, indeed. Because when you go in these volatile markets, set and forget, most of the time you would lose or you would end up with a break even. 10 years ago, it was okay, but now it's not okay. It's my opinion. So no set and forget to me. The only thing is long-term trades, medium term, but you see, it will take a lot of months for a trade to develop. From intraday, intra-week perspective, there is only sometimes set and forget. A 4-hour time frame, you always need to manage it. You really need to manage yourself. It's not a set and forget, because sometimes you see 4-hour time frame is a time frame for intraday to intra-week swings. So your trades can last for a full day and for a full 5 working days. So 4 hours for 1 to 5 days of trading. It's a swing time frame. And very often it can happen that you're 80 pips in a profit, price gets close to a full 100 pip, let's say, profit potential, and it reverses. So instead of taking 80 or 70, I don't know, pip, you can end up with a break even just because the price got shy 10 pips from your target. I always prefer to manage the trade. Goran is saying in Wednesday and Tuesday, Draghi has 2 press conferences. Can we expect that he tells us a bit more about December QE? Yes, I don't think he will say specifically about QE, but what I think is he could give us some hints about QE. So definitely we should be paying attention to that. As I say, he will probably give us some hints, only hints. So guys, this was it. If you have any other questions, you can ask me. I will roll the slides again. So this is euro dollar. Now pound dollar. Now Australian dollar. Alif is asking when does the webinar start? Alif, which webinar? This webinar has started 50 minutes ago. Yes, this has started 50 minutes ago. So take a look at these slides. Try to snapshot it. Okay, try to snapshot it. Okay. Adrian is saying he cannot find the price action trading school. How come? Let me give you the link. This is price action trading school channel, so feel free to watch it. Dollar yen. And that's it, guys. So once more for all of you who joined up a little bit later, euro dollar, pound dollar, Australian dollar, euro GBP, dollar yen. Jeff is saying thanks, Nina. Thanks, Nina. Thank you, Jeff. Adrian, thank you. Yes, you're welcome. So guys, this was everything. Let's see what will the result be. I hope that it will get us some pips. As you see, I'm really more inclined for a bearish euro dollar movement, but paying attention to this, we will see. Now, for all of you who are still in euro dollar trade, now the price is again some 30 pips from Friday's price action. It's waiting for further development, but you see, well, we cannot move the market. We can only follow the market, which is also a good thing. But if it's only up to me, of course, I would prefer to see 0900. But well, guys, it's we cannot move the market. Market movers are always the top in the food chain on Forex market. So thank you, guys. But we are good fish which who follows the big sharks, and we have been following the sharks pretty much successfully, evading all bad currents and all dangerous things which shark is leaving us with. So we are always following quietly and silently. We don't want sharks to be disturbed. Thank you guys for listening. Thank you again for being here with me. I will be here with you soon. Let's see what recap will do, and of course sign up for many more good webinars to come. Thank you guys. Cheers, and as always, trade safe.